1.2 million people still owing Ptptn.
When it is a loan, it is not a total loss.
Not easy to find a legitimate, guaranteed return investment product in the market.
Hello everybody and welcome to Beyond the Headlines, the go-to space for the top stories that made the headlines and more. My name is Amalina Kamal and today we break down the insights from the latest Auditor General's report. This year's findings once again reveal persistent financial mismanagement, government failures and mounting debt across key government agencies, public institutions and education funds. Among them, 2.8 billion ringgit in losses from 86 federal agency subsidiaries with major deficits in EPF, Armed Forces Fund Board, Tabung Haji, Felda and the Retirement Fund Incorporated. Public universities and medical centres also made the spotlight where they are reported to be struggling with consecutive losses due to declining operational grants. Also, 10.8 billion ringgit of outstanding Ptptn loans have been recorded. As a result, the National Higher Education Fund Corporation is ramping up enforcement, while experts propose payroll deductions for repayments. For the second half, all eyes are on the TriumphFX scam syndicate, where over 23.7 million ringgit are lost, with victims lured via Zoom chats and false Forex investment promises. Police have opened 23 investigations thus far, linking the scheme to a larger fraud network. Now, where is the accountability? How do we stop these financial failures and scams from getting worse, if not already? To kickstart the discussion, here's economist Professor Barjoyai Bardai giving you his insights on the breakdown of the AJ report.
Given that some agencies, Professor, rely on government bailouts, should Malaysia consider stricter financial performance KPIs for government-linked subsidiaries?
Well, actually, the many Malaysian agency, institution, even government-linked company, government-owned company, have been making losses all this while. So some of this agency performance has been very poor since a decade, and there is not much effort done to really relook at this, because we have not make a real effort to, for example, turn around the company or to restructure the institution or the company. And so the loss goes on forever. And some of the losses is due to underperformance, which has been identified, but and the government, but there's nothing much that could be done. For example, the public transport and the rapid transport, where they do not get enough passenger, and hence money the companies are bound to lose. But perhaps we need to relook at this company. It is good that the audit report is not only covering the financial performance, but also the overall management and operational performance.
So 217 federal agencies have been audited, 86 reported to have 2.8 billion in losses for 2023. But the report came with consolation of sorts, with 131 subsidiaries reporting profits. Still, the 60% isn't a comforting percentage when public money is involved. Do you think a closure is needed, especially for entities that have been repeatedly been reported on the losses?
The question now is, should we be closing all those 40 companies that are making losses? It depends on the type of losses. Some of these losses are short-term losses. Some are just losses because of circumstances, for example. And if you remember, we have this huge corporation called Sapura Energy, that used to be a real giant in the oil and gas industry, and suddenly when it announced that it has suffered some losses, then when we investigate, hundreds of companies in the group are making losses, but that losses are sometimes losses that occurs intergroup, which means that it is not a real losses, for example. So of course we need to do a thorough investigation on all these 40 companies and see which companies are deserve to be closed or why not, and which company needs to be turned around rapidly.
Because the possibility is that there could be some redundancy even, right? That's why there's stagnancy in this case. Right, we move on to the 3 public universities among the 5 federal agencies with highest consecutive losses here. So you've got 3 universities, and the 3 universities in question are UPM, University of Malaysia Sabah, and USIM, right? So in this case, with public universities struggling to sustain themselves, should private sector partnerships or research commercialization be explored to reduce reliance on government grants?
Actually, all public universities in Malaysia are running at a loss. All, except that the audit report identified the 3 public universities which suffers the most loss or the highest losses. And why it suffers losses is because in Malaysia we have this system where we want to semi-sponsor or semi-subsidize the higher education budget, and so for example the tuition fee that is charged to the students are very much lower compared to the private university, for example. Just as an example, an MBA program offered by public university is maybe at 10,000. In private university, it goes as high as 60,000, for example. But this financial loss does not actually reflect the true economic loss. What I mean is that even though they are showing a net financial loss, but in terms of contributions to the society, to the customer, to the student, they are actually generating a very high net value added. And especially this public university in Malaysia, are all rated much higher than the private university. So even though they are making losses, but they are known to have very good facility, to have very good faculties, very good teaching approach, and their graduates are they also have very good programs that they offer.
I understand, like when it comes to the subsidization of the tuition fees and a lot of the research activities has been backed by the government. But in this case, do you think like more cross collaboration between private and public sector partnerships should be taking place, particularly especially in the research commercialization aspect?
Yes, we today, for example, we have some case example of other government agency like the hospital. Some government hospital has created their private wing, offering services at the market rate to the general public that can afford. The same thing that we can do to public university, we can have a discriminated rate. So we can charge the general public higher rate, equivalent or even better than the private university tuition fee for those who can afford. And then we can still heavily subsidize those students that cannot afford to pay their tuition fee. It is better to impose the market tuition fee and then give the needy students scholarship or assistance. That way, the university will reflect their true value and capacity.
Now we go into the 1.2 million people still owing Ptptn more than 10 billion ringgit here, right? To be exact, it's 10.8 billion ringgit. How does the rising Ptptn debt affect Malaysia's fiscal position, and should the government rethink its approach to student financing?
Of course, it is a loan by student, and it involves fund that needs to be generated or raised by the government, and the government keep on rising the fund that they provide to Ptptn. But the issue is it is a loan, and when it is a loan, it is not a total loss. So it may be still be recoverable in the future. If you remember, as the election promise, the current government promised to abolish Ptptn. And of course, many people are skeptical. How can you abolish Ptptn? This is hundreds of billions of funds that will be involved. But actually, it can be done. It can be done. And it can be done with a very positive impact in the future, because we do not want our student and young graduate to feel that taking loan is a way of life. And now our student, before they even reach their career years, they have already been burdened with loan. And so when they start working, the moment they start working, they have to start paying loan. Yeah, if we in the future could restructure Ptptn, and we can actually abolish Ptptn with government still getting back all the money that has been owed by the student or graduate.
Understood. So exploring alternative policies that can, introduce income contingent repayment plans would be one of it. Now, experts have also proposed payroll deductions to solve Ptptn's growing debt crisis. But the bigger question here is that, would it impact, the graduate's entry salary? And how can the government balance the need for Ptptn's loan recovery without overburdening young graduates here?
This is the problem. Already today, 25% of the young graduates that come out of the university cannot get work, and actually there are 1.9 million of graduates that are misplaced in the sense that they have to work in the position that is not right for them, simply because they're just desperate and they need to work to live, and they are burdened with this loan. If this continue, we will see that this generation will be worse than the generation in the US, where they, on average in the US, every family need 3 generations to pay off their loan. So we do not want to burden our young graduates. We need to relieve them from all this, and there is a way to do this. We can use WACA, we can use other way of financing, so that our future generation will not have the culture of borrowing as a way of life.
And other commitments as well, right? So how are we supposed to address, I suppose, the minimum wage or at least entry wage policies or salaries if you're not progressive when it comes to addressing loans, especially student debts? Yeah.
The average salary of young graduate in Malaysia today is only 1,800, and that is well below the minimum cost of living. The poverty level is at 2,208 ringgit. And Bank Negara said the minimum cost of living is over 3,000 ringgit a month. We need to find ways to enable this student to live quite comfortably while they are studying. And we could do this by breaking up for example, the university life. And we have today the university industry partnership program, which allow students to go on a sandwich program. They stay in the campus for 1 year or 1 semester, and then they go to industry the next semester.
Having to create that sort of conducive environment so that when they do enter the industry, they're not like shocked. They're not like culture shock in that sense as well, right? Because they've already taken accountability on certain adulting sort of decisions. Thank you so much, Professor Barjoyai Bardai, for joining us on this call. I do appreciate your insights. We hope to see you on the set next time, hopefully.
Yes, thank you.
Next, we uncover the shocking details of the TriumphFX investment scam, a syndicate that has been active since September 2019, luring investors through Zoom chats and social media ads, promising guaranteed monthly returns of between 4 to 7%. A classic red flag in fraudulent investment schemes. Now, investigations by Bukit Aman's Commercial Crime Investigation Department, CCID, have resulted in 72 police reports as of February 24th, with 10 cases currently under Section 420 of the Penal Code for cheating. Beyond individual cases, this scam exposes a larger issue of unregulated investment schemes operating under the guise of Forex trading. To break down how these scams work, why people fall for them, and what investors need to watch out for, TradeView Capital's Neoh Jia Man shares his insights.
The TriumphFX basically scam syndicate, right? It has sparked a larger conversation among public in terms of where they can invest their money on, basically highlighting the financial aspect as well, because a lot of people, when they want to make high profits, they tend to jump into every opportunity that's offered. So my question first would be, how can investors differentiate between legitimate high return investment and a Ponzi-like scheme?
It's not easy, given that a lot of these scammers, they are getting more and more sophisticated, and because there are a lot of other participants or even hired actors who are engaging those customers, so it's not easy for one to differentiate. But there's one key factor that one can look out for, which is you should be aware when an investment scheme offer these things such as guaranteed return or capital protected return. This is because we have to understand that the 10-year government yield, our government bond yield, which the financial industry personnel usually refer it as the risk-free rate, is only at 3.8%. So if any of these schemes are offering return that are above this 3.8% kind of return, then the firms themselves are bearing the risk on behalf of the investors. And we have to realize that our Securities Commission Malaysia actually regulate this kind of products with capital protected or guaranteed return in their name tightly. So for instance, if a unit trust were to offer this kind of features, then it has to be backed by a guarantor, which is either like a licensed bank, investment banks, or even Islamic banks with a minimum top 3 long-term credit rating. So it's really not easy to find a legitimate guaranteed return investment product in the market in the first place.
And in the case of TriumphFX, they actually promise monthly returns of between 4 to 7% to their victims. So that is one red flag that should have been detected, basically. If per annum is not more than 10%, monthly between 4 to 7%, that's quite high as well.
Okay, I have to admit that it's true that sometimes in the market, there are some legal entities, such as those are peer-to-peer operators or even trustee companies. They might offer their own version, their own guaranteed return investment schemes that has higher return than like 4%, maybe like 7 to even 10%. But if you study those the legal agreements of those schemes in detail, you realize that the risk is either transferred to other entities or it's not fully disclosed. For example, there might be some of the trustee companies might be lending your money to some higher risk borrowers. So yeah, it's only in the black swan event that those borrowers defaulted, then they might not be able to return your money, but otherwise, those are still okay. But just that it's not truly risk-free.
My question next would
Yeah.
be, are there official regulatory bodies or websites where Malaysians can actually check if an investment scheme is licensed and legal? Or do they have to check with the Securities Commission? How do they go about this?
As an investor, you can verify this by going to, actually Securities Commission has a website called SC Investment Checker. That's a very useful website where, as an investor, you can go there and see if an entity is listed there and if it is licensed. So if it's not listed there, highly likely that entity is not even licensed locally. But even if it's not licensed locally, it doesn't mean that the scheme or the brokers or the platform is illegal. We can actually look out for if those firms are actually licensed by financial regulators in other countries with good investor protection. For example, the US, UK, Singapore, or even like Switzerland, or that. Just avoid those that are in like some less prestigious region, like let's say Cyprus or Vanuatu, or that.
30 proxy companies of TriumphFX, of the firm, actually was registered in Seychelles. So that's an area where should raise red flags as well, would you say?
When you see a firm is licensed in like Seychelles or this Cyprus or that, you can just ignore the fact that they're licensed, because those license does not mean anything, since those firms that can acquire the license for maybe 20 to 30,000 ringgit. So it actually doesn't mean anything because there's no protection offered by those jurisdiction.
Particularly are vulnerable to it. How can they protect themselves from making emotional decision-making investments? Because sometimes they take whatever they have from their EPF and then they put into an investment scheme that they might not know much about. We're talking about financial literacy here at play. What sort of resources would you recommend for people to educate themselves, especially retirees?
It's definitely a high risk group, because they have the money, and even though they have the time, sometimes they trust others too much. And I would say EPF is definitely one of the best place for retirees to place their money, because the government is providing a guaranteed return. But should they wish to invest in other vehicles to gain higher return, they could consider don't take out the money directly from EPF account, but rather use the EPF money inside the account to invest in certain investment scheme that are approved by EPF. They can do it on inside EPF portal itself. Otherwise, just put money with those financial institutions that are already well established, for example, the banks, rather than those cryptocurrencies or Forex traders, which highly likely are not even regulated. And it's best that if those retirees have a trusted contact or family member who are savvy in terms of all this financial literacy, so that they can at least gain some good advice before they go ahead with their decision. So never make a rush decision. While for us, if we have the time, we should try to study up more on all the financial tools and also financial knowledge. There are actually a lot of free resources online. For example, Bursa Malaysia provide this website called Bursa Academy, or even Securities Commission, they offer like this portal called InvestSmart, and also they also hold a lot of different kind of fairs and events from time to time, which are free to the free for public to access.
One last question, meaning to say, because sometimes we can't really deter people from going into Forex or cryptocurrency. As a trading expert yourself, if they do want to venture in this field, what are some of the tips that they need to consider before they go for a full-on investment?
Forex and crypto is an area where all the scammers that are very active is very prevalent, this kind of Ponzi scheme, because there's lack of regulatory oversights. There are not much entities that are licensed to conduct this kind of investment schemes in Malaysia. And in general, I mean, we perceive those Forex and crypto as a high risk, high return activities. So it's easier to attract us to put money lah. But one thing is, Forex and crypto, I wouldn't say that investment, they are more of a speculative activities. So the risk is very high. No one can give a guaranteed return from Forex and crypto because they are super speculative in nature. And so like even on a day-to-day basis, they cannot guarantee that they can make money. That's why when you see a scheme that's combined with guaranteed return together with crypto and Forex, there's 99% chance that they are scams.
The Malaysian Media Council MMC Bill 2024 marks a historic milestone in Malaysia's media landscape, bringing to fruition over 50 years of discussions on establishing a dedicated council for media affairs. Malaysian Press Institute President Datuk Yong Soo Hyong praised the Communications Ministry for working closely with media professionals to balance diverse interests in shaping the council. He highlighted the bill's groundbreaking provisions, which include setting industry standards and a code of conduct for ethical journalism, promoting media independence and safeguarding journalists' rights, encouraging dialogue between the media, government and public, as well as proposing media law reforms and supporting journalist training. Now, the bill passed in Dewan Rakyat recently paves the way for a self-regulated media industry, ensuring press freedom while upholding accuracy and credibility in journalism. Unfortunately, that is all the time we have for today. If you like this particular episode, don't forget to like, comment and subscribe. Don't forget to also turn on the notification bell if you haven't already. You will get not only just NSC's Beyond the Headlines updates, other news reports and videos delivered by NSC Online will be shown to you. My name is Amalina Kamal and I'll see you next week.